Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, August the 2nd. The year is 2023. Let's talk trading. Reasons for entry part 2 with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Walmal, we had a trader that I guess they probably watched a few of our videos and they were saying they were having trouble with the Walmal method.
Yep, I can understand that. Yeah, it's the Walmart method was, I talked about this in yesterday's video a little bit, and because we yesterday we're doing the a monthly wrap up to a certain extent, and the idea that a year ago we were having monthly ranges of 1,000 pips, 700, 600, 1,400 pips. I'm just reading off the numbers that are on my smart range chart here, and typically now we're seeing 480, 450, 370, 310. That's what we've been seeing lately. And, we're talking about ranges that are literally a third of what they were, from a year ago. And that certainly is going to have an effect on our methods. And we need to go and adapt to that. We need to adapt to what's happening out there. So there are a couple of ways you can adapt to make the Walmart method still profitable and still work. But the first thing is that the idea with the Walmart method, one of the big thing was the exit strategy, which was 10-5-1. In other words, you're looking to go and get 10 pips, but if you can't get 10, then get 5. If you can't get 5, get 1. And the idea was once you've made 1 pip, then what you do is you then move your stop loss so that you can only use 3 pips. And then once you get to 5 pips, then what you do is you move your stop loss so that you will always get at least 1 pip. Then if the market moves enough where you get 10 pips, then you move your stop loss till you get at least 5 pips, and then you let it run and see what you get out. A year ago, you were able to get, 10, 15, 20, 25 pips, sometimes even as much as 30 pips on a run, and, but that was a year ago. That doesn't really happen as much anymore. So if you're trading the Walmart method, my thinking on it is, and I still take Walmart trades, but the difference is that when I take a Walmart trade, I'm not looking at 10-5-1 anymore. I'm looking to make somewhere between 5 and 2 pips. And I really haven't set up like a method like 10-5-1, but it's more of get into the trade. As soon as I see some positive territory, as soon as I see that price stop moving in my direction, I just stop and get out and just take whatever I get. If I get 5 pips, that's great. If I get, 3 pips, that's fantastic as well. And most of the times you only get 1 or 2 pips. And you just have to go and recognize that market conditions change. And as market conditions change, then we need to go and be smart enough to go and, be able to react to that. And that's part of the reaction. You're not changing the method. You're not changing, we always say, I think Tiro, both you and I both say the same thing. Stop method jumping or method hopping, and you can stick with the same method. And you don't want to sit there and change the method, but you may need to go and actually maybe fine tune it to make it work, especially if you don't use it on a different pair than the pair that I like, and certain pairs that it'll work better on than others. And, for me, the pound dollar was the best pair for me, especially because it lined up working well during the hours that I want to go and trade. I don't want to be trading at 2 o'clock in the morning and doing some type of Asian thing or doing it, the London or the Euro in the early hours. And for me, that's just crazy. I don't want to be doing that. It's just, I'd rather be sleeping at that time. So I had to go pick a pair that seemed to work out well for me. See, that's not changing the method. That's just going and taking the method and finding where it matches for you. And again, here we're talking about take the profit that you can take out, and what that means is that, again, don't look for the 10 pips, don't look for the 5 pips, maybe look for the, 5, and if you don't get the 5, then grab the 2 or 3, and you just have to go and recognize that. And I think that, Tira, you went and observed something as well in terms of it, and you kind of still do it a little bit. And in terms of, you've changed the Walmart lines from being every 10 to every 5. Do you want to explain that a little bit?
Yeah, in fact, while you were talking, I was changing up the chart to match what I do now. And so I've got the lines every 5 pips as opposed to every 10 pips. And rather than looking at the H1 color, I look at the M30 color. And I also have a few other horizontal lines in there, like the previous H1 high and low, which I sometimes change that to the previous M30. Let's see, high, low, my period, 30 minutes. And I've got the daily open and the previous days low and high, etc. So what I do is, so at the open, what I do is at the open of the M30, it'll paint the buy and sell lines for Walmal. And rather than look at the M30 chart, I actually drop down to the M5 chart, and I will take that break. And then what I'll do is, so in this case, it'd be short at 20. And then if it goes, I try and play it for 5 pips down to would be down to the 15 line. And if it gets to the 15 line, I'll set my stop loss at break even +1. I start my stop loss at entry -10. I'll give it a 10 pips, but usually I'll probably double up in the opposite direction, but that's a little bit different story there. So then if it continues on past there, then I'll either move the stop loss up, or when I see that price is stalling or reversing, that's when I'll just take my pips off the table. But in a lot of times I'll try and sit on my hands and let the candle close, but that can be really tough sometimes, especially, when you start to give back a pip or more, because those pips sometimes seem hard to come by. But that's how I trade it. So like right now, the exit would have probably been somewhere between, say, 10 and 12 off of that second candle. So which would be bar 2 on the chart right now on the M5 chart. And the reason I'm using M5, say, as opposed to M1 is M1, sometimes if I take trades off of M1, it just seems like it'll go against me, as opposed to M5. Even though price is the same on all charts, it's just I take the signals from M5. So for every 5 M1 signals, I'm only going to get 1 M5 signal. So it usually doesn't, I usually don't get stuck as bad.
Yeah, and I think walking away from the Walmart method for a second, I think you said something there that's incredibly important, and that is the idea that for every M5 signal, you're walking away from 5 potential signals on M1, and you say, well, you're losing. Some people say you're losing 4 opportunities there. No, what you're doing is you're slowing down, and as they used to go and say, you're slowing your roll.
Right.
And what you're doing is you're giving yourself enough time to analyze the chart a little bit better, and actually understand what's actually happening, and giving yourself enough room that you're able to go and do it. Now, I still stay on the M1. I enjoy the M1. I like the quote unquote the excitement of it. I guess I don't know. Maybe that's not a good thing, but for me, it works out well. And I'm one of these people, unfortunately, that I was like from the movie Flash. I was a squirrel, and I just every time I see a certain shiny object, I'm gonna jump on it. And so what happens is, for me, if I'm doing like M15 or M30 type trading, a lot of times what I was finding was I was inventing methods, inventing reasons to take trades that weren't there. Well, by sticking to the M1, what that does is that prevents me from doing that. And because the opportunities are, almost always an opportunity to go and get into a trade on an M1 candle. Not always, but often enough that you're not sitting there trying to go and invent in your brain why you should have done this, why you should have gone long here, why you should have gone short there. It just, you don't have time to go and do that. The only thing that you have time to do is actually take the trades that are actually presented to you, and take the exits that are presented to you. And for me, it keeps my hands off the wheel of trying to reinvent the wheel. So like what I said in the beginning about the Walmal method, you don't change the method. You may go and change the way you use the method, but the method doesn't change. And that's what I got to go and be. For me personally, that's one of my biggest things that when I wasn't profitable, that really burned me a lot, was that I was sitting there changing the method, and you can't do that, or at least I can't do that, and I don't think anybody can. That's just a personal opinion, And the second thing that you said there, Hero, that I thought was very important is that price is always the same on every single chart. But the thing is, though, when you're looking at 5 minutes worth of data, it's 5 minutes of consolidation. So that number on the chart, is maybe a little bit more stable. I don't think it's any more significant. I think it's just more stable. It's had more time to mature and to net itself out as to where people believe price is going to go. Because that's what we're doing. We're taking bets on where we think most people or most money think that price is going to go. And, you had said something, and I don't know if you said it in the video or not, or it was a different conversation you and I had. You got to be able to see the future. You got to be able to go and you're predicting the future of the market is essentially what you're doing. But when you got more consolidation, it gives you the ability to do that. It gives you the ability to sit down and actually look at the chart and say, hey, most people think that, today is an example. Most people think that the dollar is stronger than the pound, and that's why the price of the dollar has gone down so much.
You mean the pound?
Rather, the price of the pound has gone down so much, and whether it's true or not, it's immaterial. The reality is most people or most money think that it is, and therefore, the higher time frames, they can give you a clue to that. They give you a better understanding of what the big money thinks it's going, or where price is going.
Yeah.
And so, what do? Take advantage of it.
Yeah. Yeah, and the one thing I don't think a lot of people really realize, the pound is at 1.27, blah, 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 right? Well, at 1.27, that's $1.27. So $1.28, that's a penny more, and 126 is a penny less. And so all that 100 pips is just a penny.
Right. Absolutely.
And so it's like, I think if you keep that in mind, it's just like, well, wait a minute, is this thing going to go up a penny or down a penny?
Yeah. And the thing is, to us, it's only going up a penny or only going down a penny. But the reality is, if you're a big bank and you're investing, $500 million, well, that movement of a penny, that's significant.
It sure is. And you know what else? The fastest 15 minutes in trading is just about up. I think we're going to have to do a part 3 on these reasons for entry, because like I said, there's the traders out there that, look at some of our methods, and some of them are struggling, but they're not realizing that sometimes, like you said, it's really time based. You don't want to trade Walmal method really during the Asian session, and we'll probably get into that a little more in another video, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.